right now because the time is up. Okay, so everyone already can see the poster and our HTX App already start streaming. And since we are streaming on a lot of platforms, so I'm gonna check them one by one. Let's see. Okay. So, yes. So for Twitter side, I think everyone already can see the picture of all of us right now. And also YouTube side. Let's see. Oh, YouTube side works as well. One second, guys. I'm gonna check the comment area really quick. Okay, so now I start. So good evening, good morning, or good afternoon to all of our HTX Live family, and welcome to another HTX Live episode. So over the 2025, I'm gonna say over the past years because it's already more than 1 year or 2 years. A lot of years we keep doing this. Try to invite a lot of KOLs or a lot of influencers, a lot of project representatives to our show, to our live show. Talk about the current market or the trends to share their insights of the market as well. And yeah, so welcome to another one. And I don't know, I feel it's such a long time. I think this is our first episode after the Chinese New Year. So today, as you can see from the poster, we have 3 guests, and me, I am the host Ruth from HTX Live. I believe all of you already know me well. So before we start everything, I'm gonna invite all of our guests to give us a brief introduction, okay? So first, I'm gonna invite Leo Park. Hello.
Hello, this is Leo Park.
Yeah, anything like where are you from and what project you are representing?
Okay, hi everyone. I'm Leo Park from the WGA project. Actually, I'm really happy to be here on HTX Live today. We've got some very interesting market trends to talk about, especially around the Iran situation. Yeah, I'm so happy to be here. Thank you.
Well, thank you, Leo, and really looking forward your insights later. So next, I'm gonna invite Austin. Hello, hi.
Yeah, hi everyone. Can you hear me well?
Yes, very clear.
Okay, thank you for inviting me here. Thank you, HTX. And this is Austin, a community ambassador for Nourish Product Hall. So just give me a time, like I would like to introduce what is Nourish and what we're building. So Nourish is a building that what we describe as a post-quantum trust infrastructure for the Web3 and the digital finance and the blockchain networks expanding into the areas like global payments, PayPal, and real-world finance workflows. And we have some kind of unique characters, like we are very much decentralized, and also like decentralized cybersecurity that mesh powered by DeepIn, where nodes, validators, and devices continuously generate the cryptographically variable proof of security signs. And Nourish is also working with the ecosystem that partners like different kind of projects and integrating the quantum secure infrastructure into the payment and settlement systems. So we have a long-term plan, the long-term vision to provide a secure foundation for next generation financial networks. So this is a bit about Nourish and me. Thank you.
All right, thank you, Austin. So next, I'm gonna invite Faye to give us a greeting. Hello.
Oh, thank you, host. Thank you very much for having me today. My name is Bei, and I used to work in traditional financial company, and I run my own Web3 media channel, creating short videos and managing an official account where I share my views and insights. And now I have more than 350 crypto followers across all the social media platform, and I'm also the founder of Shopify Finance. We sincerely hope we could help more and more people enter crypto safely and quickly. And yeah, thank you.
All right, thank you, Faye. So yeah, today we have three guests, and they all from different maybe countries and from different backgrounds. Some of them are from traditional finance to Web3, and some of them are the project represent. Also, I'm checking the comment area. Some audiences ask what it's about, and I'm gonna also give like a little bit background introduction of today's topic. As you guys can see from the posters, Iran tensions, safe haven, or liquidity shock for crypto. So over the past few days, it's very sad to see the war ongoing, and global market have been closely watching the rapidly escalating tensions involving Iran and the border Middle East plus America. So the situation has definitely raised concerns about regional stability, of course, and we see a lot of buildings, a lot of schools, a lot of people were getting very, very injured. And energy supply disruptions, the oil issues, and also potential spillover effects into global financial markets. And we do see a skyrocket of Bitcoin and Ethereum recently, especially today or the day before. So for the crypto market, it's a lot of people are saying the bull is here, the bull is here. As for the worldwide, it's definitely not the, of course, not the peaceful moment. So yeah, whenever the geopolitical conflicts intensify, traditional market usually react quickly, and we often see spikes in oil price and also volatilities in liquidities, and also capital flows shifting toward so-called safe haven assets like the digital gold, Bitcoin, like us, like Web3. Yeah, so some investors call it digital gold, while others still treat it more like a high beta tech asset that moves with global liquidity and risk sentiment. And also, I think we can find that a couple of weeks ago the market is really, really down. Bitcoin, keep dropping during the past weeks, but then rebounded I think yesterday or the day before. And so this raises an important question: how exactly does crypto behave during geopolitical shocks? So you guys can see tonight we have three guests, so we are gonna talk about everything when global uncertainty rises. So let's dive into our first question. So in the sudden geopolitical conflicts such as the recent Iran-related tensions, so what typically Bitcoin first reaction, and also does Bitcoin behave more like a risk asset or a safe haven asset during these events? And specifically in this case, why did we see the market drop first and then rebound? So I'm gonna start asking Faye to share a little bit. Okay, are you ready?
Yeah, thank you. Yes, and on February 28th, after the geopolitical conflict, Bitcoin dropped almost about 7% within 50 minutes. And at the same time, US stocks and other high-risk assets were falling, while traditional safe havens like gold and oil were moving up. And in the first moment of shock, Bitcoin traders like risk assets. And from the institutional side, major players like BlackRock participate through spot Bitcoin ETFs. Institutions typically sell high-risk assets first to raise cash and reduce exposure, and the selling pressure aids to the downside. And we know we could trade Bitcoin 24 hours frequently, and it's highly liquid. When market panic, it becomes an easy source of liquidity and basically like a cash machine. And if institutions need to raise money quickly, Bitcoin is one of the fastest things they can sell, right? And as all know, crypto market use a lot of leverage, and when prices drop sharply, forced liquidation kick in, so that's a negative loop. Selling triggers and become liquidation, and liquidation triggers more selling. And then we can talk about why did it rebound. Firstly, we realize this is not the start of a full-scale war, and yesterday it's just stopped the conflicts. So panic selling slowed down. Secondly, if the war breaks out, people could weaken trust in fiat money. And in this situation, some people turn to Bitcoin as an alternative store of value. So from then, it's a real escape from fiat money risk, I think. Yeah, thank you.
All right, thank you, Faye's share. And so, what about Leo? How do you see this one?
Yes, actually, when there's a geopolitical risk like in Iran, traders often panic sell to get cash. It's a normal reaction, so Bitcoin drops first because of panic selling. But once the panic fades, long-term investors step in and buy the dip. That's why we often see a rebound. People buy back because they see Bitcoin as a safe haven, like a digital gold. So short term, it looks like a risk asset, but it becomes a safe haven later. And this pattern has happened many times in previous geopolitical events. Does that make sense? Yeah.
Yes, yes, definitely. So it's still about the panic situation. People get
Yeah.
by the emotion side more.
Mm-hmm.
All right. So what about Austin? How do you see this one?
Okay. So I think like from what we have observed historically, the Bitcoin usually goes through the two-phase reaction when sudden geopolitical tensions appear. So the first phase is typically that risk adjustment. The traders reduce leverage, large funds, and rebalance portfolios, and liquidity that shifts quickly. So during this stage, Bitcoin often behaves similarly to other high volatility assets, and when we often see a second phase, like uh, where the market stabilizes and capital begins relocations again. That's when the Bitcoin's digital gold narrative that tends to the re-emerge. So personally, I think the Bitcoin today sits somewhere between a tech asset and a store of value asset actually. So in the short term, it reacts to liquidity and the macro sentiment, but over longer horizons, it increasingly behaves like a macro hedge within the digital market. So the drop then rebound patterns we saw recently is actually quite consistent with how the Bitcoin has reacted during the macro shocks actually. Yeah, that's my opinion.
All right, thank you guys for the first answer. So it seems like we all think because of the unstable tensions or the unstable situation, people feel first they need cash, and so they sell them, and then make the price going down very quick, and then maybe after that we can see the digital gold, and also the meaning, or the we are trying to get like a safe haven assets, and then we just try to get it back, and then the price just rebound. All right, so let's move on to the stablecoin side, which often tells us a lot about capital positioning, and also have stable coins show any euro change during this period. I'm not sure if you guys follow or keep an eye on stablecoin. For example, are funds leaving the crypto market, or are they simply moving into stablecoins and waiting on the sidelines? Or have we seen increases in one of the one of the biggest stablecoin, USDT or USDC, minting and redemptions on chain? So how have stablecoin reserves on exchanges shifted recently? And also, in other words, are crypto investors cashing out for safety, or they are just staying inside the ecosystem and observing the situation? It's more like a capital flow. Still, I'm gonna ask Leo to share about that.
Okay, stable coins are often a better indicator of market psychology than price alone. In periods of geopolitical stress, we typically see capital rotated into stablecoins rather than fully exit the ecosystem. Exchange stablecoin reserves often increase as traders move to the sidelines but remain within crypto. Actually, stablecoin supply is one of the key liquidity signals in crypto. I mean, if we look at the on-chain data, people are just switching to USDT or USDC. They are not leaving the market, they are just waiting on the sidelines. We call this dry powder. Actually, as long as exchange balance stay high, the liquidity is still here. So I don't think investors are quitting at all. Yeah, that's my opinion.
Okay. So what about you, Austin? How do you see the stablecoin side?
Thank you. So I think like stable coins are actually one of the most interesting indicators during uncertain periods. What you often see in the capital rotating into the stable coins rather than the leaving the crypto ecosystem entirely. Investor essentially moves into the neural gear that is wait for clear market signs. So from a market structure speculative, I usually watch the three things. What is the first one? Stablecoin flows across the chains, and the second one, that is minting and redemption activity, and exchange stablecoin reserves. So if exchanges I can say the reserves the increases, it often means the liquidity is waiting on the sidelines rather than exciting, or I can say rather than the existing the market actually. So in my experience, crypto markets recover faster when capital stays inside the ecosystem through stable coins rather than leaving entirely. So I think that's the behavior of the stable coin.
Well, so yeah, I think we both agree. They are just um how to say, waiting on the sidelines and trying to get another chance to get back in. So yeah, thank you guys for the answer. So also we are multi-streaming on HTX Global YouTube channel and HTX Global YouTube channel, and also HTX Global Twitter, and also HTX Live. And so yeah, right now we have more than 4,000 audiences on the live stream. And yeah, if you have any question regarding to this topic, feel free to ask, or if you have any thoughts, feel free to leave on the comment area so I can check. I'm actually checking right now. I'm watching the comment area. And also we prepared a lot of USDT airdrops. So if you are watching the live stream from YouTube or from Twitter, feel free to go to HTX app and grab some USDT, okay? So alright, so let's move on to the next one. So I'm gonna say it's another key factors is actually the three guests already mentioned. It's about the micro economy or the micro impact of the geopolitical conflict, because I checking the news. I think all of us are checking the news very often than before, since the whole Iran situation start. So if the tensions between Iran and the border Middle East push oil prices significantly higher, that could potentially delay Federal Reserve rate cuts. So the question is, would a delay in rate cuts surpass crypto markets? Is the current crypto cycle primarily liquidity driven, or are we already in a structural bull market supported by institution adoption and ETF inflows? So yes, what do you think of this one, Faye?
Thank you. Sure. If the conflicts continue like past few days, the geopolitical tension in the Middle East push oil prices to almost $85 per barrel. And with this, with a single day jump of more than 9%. And that will raise global inflation concerns again. And because of that, the market start pushing back expectation for Fed rate cut. We could see, according to CME Fed Watch, rate cut hope gets delayed, and there about 97%. The Fed keeps the rate cut rate unchanged in March, and so the first rate cut is expected in June or even September. And the US dollar gets stronger. A stronger US dollar usually means less liquidation for risk assets. That's one big reason why the crypto market has been under pressure. And trading value has dropped, and over sentiment has turned more negative. Well, we know yesterday the conflict has been finished and the price of Bitcoin increased today. So yes, a great trader doesn't let emotion take over, just sticks to the plan. And personally, I think this crypto cycle is more about shrinking liquidity in institutional capital is becoming more selective and reducing overall exposure. Funds like FBTC and GPTC has been the assets under management decline, and they are cutting exposure to high volatility assets. So many institutions still prefer to keep Bitcoin as a micro hedge. And if they have to hold something in crypto, Bitcoin is usually the one they keep. Yeah, and that's all I want to share for this question. Thank you.
All right, thank you, Faye. So let's circle back to Leo. How do you see this oil question?
Okay, rising oil prices are a big macro headwind. It can push the Fed to delay rate cuts. If that happens, market liquidity gets lower. But actually, Bitcoin has increasingly been viewed as a global hedge. I mean, it often holds up much better than altcoins because it's a core asset. So even with macro pressure, Bitcoin stays strong. And actually, many institutional investors now treat Bitcoin as a macro hedge. Yeah, that's my opinion.
All right. What about you, Austin? How do you see this one, the oil price one? How the micro side affect the market?
Yeah, definitely. I think like macro liquidity definitely plays a very important role. So if oil price rises significantly and inflation and also expectations increases, central banks may adjust the rate, and that affects the risk assets broadly, including crypto also. But what's interesting about the current cycle in that it seems to be driven by the two forces at the same time. The first one is the macro liquidity, which influences the market sentiment in the short term, and the second one is structural adoption, which is I can say institutional participation, ETFs, infrastructure development, and also the payment integration. So from my perspective, Bitcoin leads to uh, absorb the macro shocks better than most altcoin because it has a deeper liquidity and stronger institutional positioning, and altcoin usually responds the more directly to change in the risk appetite actually. So I think yeah, that's my opinion actually. Like institutional capital that could reduce exposure tactically if the macro uncertainty increase. Yeah.
Mm-hmm. Yeah, all right. Thank you guys. Uh, in case, because we have a lot of new joiners. So, for this one, because I see a lot of people ask about the logic between, the oil price and also the Fed Reserve rate cuts. So I'm still gonna try to give a little explanation, because the oil is actually a core driver of inflation, because it's the oil, every country need that, right? And also it's embedded in almost everything, not in country but in every economy. So like gasoline, transportation, shipping, and also travel, manufacturing, electricity, energy. So every country or everyone cannot live without oil. So when the oil price rise, so the cost increase across the entire economy, which will push the consumer price higher. And also, just remember this, the Federal Reserve's main goal is actually to controlling inflation. So that's why, since we just mentioned earlier, oil is a core driver of inflation, and the Fed's main goal is to control the inflation. So that's why if inflation is still, keep going up, and cutting interest rate too early could make inflation worse. So that's why the central bank or the Fed tend to delay rate cuts when energy prices, especially oil prices, spike. And yeah, I think that's like a background explanation. And also about why this matter for crypto, I believe Leo, Austin, and Faye just mentioned a lot, but still trying to give one more thing is because our market, like crypto market, are highly sensitive to global liquidity. So if oil causing inflation, causing higher rates for longer, and then the global liquidity could stay, more tighter. So crypto, especially altcoins, may struggle more. I hope that's explain everything. So all right, let's move on to the next side. It's about the altcoins, because historically during periods of global uncertainty, risk appetite tends to decline, and capital often flows into more established assets like, I'm gonna say major coins like Bitcoin, Ethereum. So could we see accelerated capitulation in altcoins if geopolitical tensions continue? And would capital rotate back into Bitcoin, potentially pushing Bitcoin dominance higher? And which sector might be most vulnerable right now? That's an interesting question. For example, like meme coins, AI tokens, it's very hot narrative, right? So I'm still gonna invite Leo to share a little bit on this one. Hi, Leo.
Okay. It's a tough time for altcoins. During high risk, money flows to the safest place, Bitcoin. We call this flight to quality. This is why Bitcoin dominance usually goes up. Especially meme coins and small cap tokens can move a lot in times like this. I mean, it's better to avoid high risk tokens until the market stabilizes. Yeah, that's my opinion.
Okay. Very simple and neat. Okay. What about you, Austin? How do you see this one, altcoin?
Yeah, so I think it's quite tough for altcoin actually in this situation. During the geopolitical instability, actually, altcoin often face accelerated I can say capitulations as a risk that is adaptive declines. So in uncertain periods, the market concerning in the Bitcoin. And smaller cap tokens, whether meme coins, AI narratives, or experimental projects that generally experience larger volatility because their valuations depend heavily on the sentiment and liquidity condition. So definitely, I will go for yes that it's fairly common to see the Bitcoin dominance increase during the geopolitical or the macro stress period. But that doesn't necessarily mean that is innovation shows downs. I think so. Often the infrastructure and the technology development continue quietly during those phases. But like as I said, altcoin going to be face some difficult paths actually. Yeah, that's my opinion for now.
Mm-hmm. Yes. So, well, thank you for the answer. I'm still checking the comment area. So right now we have more than 6,000 audiences listening to this live stream. And anyways, I hope you know our community can keep learning and just follow HTX live. And every week we try to output some valuable insights from a lot of people from the industry. And yeah, all right, so let's move on to the final one. It's more like a bigger picture, because if this conflict right now, it's maybe happen because this conflict keep escalating. How might the crypto market evolve over time, and could we see a rapid recovery once the market digests the shock, or could sustained high oil prices and rising inflation tighten global liquidity, creating a longer-term pressure? So on the other hand, there is another possible scenario. So in regions facing instability or capital controls, demand for decentralized financial assets sometimes increases. That's true, especially the currency of Iran almost lost all of the value. So a country's currency become a pile of paper. So I believe there must a lot of people from Iran demand for decentralized financial assets. So could capital outflows from Iran and the border Middle East actually increase demand for crypto as an alternative financial system, or just stablecoin? So among these different scenarios, which one do you think is the most probable, and how should investors position themselves in the current environment? So yeah, I'm really looking forward to hear our guest advice, especially regular investors like you, like me, like our audiences on the live stream. How should we position ourselves in this kind of current environment? Still, I'm gonna ask Faye to share a little bit. Hello, hi Faye, are you there? Okay. Let's. What about Leo? How do you see this one? Any advice?
Okay, actually, my simple advice, don't let panic drive your decision. If the shock is short, we'll see a V-shaped recovery. Keep some liquidity ready, hold your core Bitcoin, and stay patient. So actually, it's really about portfolio positioning in times like this. We believe in the structural growth of this market. So stay calm. Yeah.
Stay calm. All right. What about Austin? How do you see this one?
Yes, as Leo said, stay calm and quiet. Like, don't be panic, guys. If tensions escalated or last longer than expected, I think we should see the several dynamics play that out simultaneously. One scenario is that the event-driven volatility followed by the market stabilization, which is actually the most common pattern historically. Another scenario that involves energy-driven inflation pressure, which could influence the global liquidity condition, and risk asset. But there are also structural angle that people sometimes overlook in the regions that facing the financial stability, instability, and decentralized assets that can provide alternative access to financial system and capital mobility. So in this situation, the blockchain adoptions can actually accelerate. So I think the most realistic outlook is mix of short-term volatility combined with the continued long-term adoption. So, and in my view, peers like often highlight sometime like something very important: the value of secure financial infrastructure. So don't be panicked, just stay focused in this market situation, and also I can see use your brain, do some research, yeah, and stay with the crypto market. Thank you.
Yeah, we still have a lot of chance. Just calm down, be patient. Yeah, I think in conclusion, because the first of four questions we talk about a lot, from the Web3 side to a more bigger picture, to micro side or to the entire geopolitical side. So when we have the geopolitical conflicts like this, usually there is a pattern like short-term volatility, that's for sure, and also capital rotation toward not only Bitcoin but also like stable coin, and also there are selective weakness in smaller altcoins. We cannot see all of them, but there is definitely a big chance. So yes, Leo and Austin also mentioned, just calm down and be patient. I still want to say, other than that, we should focus on resilience, because in such geopolitical uncertainty, market often like rotate toward assets perceived as more stable. So within crypto, that typically means Bitcoin and other major assets with strong liquidity, and also like we all mentioned earlier, like meme coins, small cap tokens, or highly spectacular narratives, you guys should be watch out, okay? And also just pay close attention to micro signals, which means just try to check your news more than often than before, and also just maintain the liquidity, like Leo just mentioned. Save your coins, save your USDTs, and just wait. Just be flexible, okay? So I think that's definitely wrap up today's live stream, and really appreciate our guests, Faye, Austin, and Leo, and really appreciate our audience's time and energy. And once again, thank you everyone for joining us. And yeah, every week, same time, we have this kind of valuable live stream. So if the market good, if the market bad, we are all here with you, okay? Guys, thank you. That's it for today's live stream. Thank you, Leo. Thank you, Austin. Thank you, Faye. Bye bye.
Thank you. Bye
Yeah,
bye.
thank you everyone. Bye.
Thank you.